Don't give up on the bull market yet. Why? Because we're building a solid staircase of support as we continue to go higher. Have a look. Friday's low of the day was a perfect bounce off of our previous all-time high. And now, today's low of the day is basically a double bottom versus our all-time high day on Thursday. The other reason why this really matters is because don't give up on the bull market yet. When the S&P is higher by 10% or more at the midpoint of the year, we have an 82.6% chance we're going to be higher, 8 or 10%. And the second one here, part 2, tells us that we have an 80% chance of being higher, either 6 or 10%. That can get us to as high as 600 on SPY. And we talked about the previous numbers, it's 577. So if we can go as high as 600, is there other evidence on the chart that tells us that we could go higher? Well, yes. First of all, price is king. And exactly where we would expect to find buyers, we're finding them. And this is important because we also had a dividend issued. So there was added pressure onto the S&P. Second thing I would note is that there's actually pretty good volume. Have a look here. When we went to our new all-time high, pretty good volume, and pretty good volume. Is it overwhelming? No. But is it good enough? Hey, probably. Look here to the NASDAQ. Bigger green and big green. We're starting to build up some momentum here. So is it really 1995 like we talked about on the weekend? If so, yeah, don't give up on the bull market yet. Let's look at the heat map because we're noticing that Tesla is back in the driver's seat, up by nearly 5%. Some other stocks are mixed, which is understandable. We also talked about how the market is trading like a beach ball you're trying to hold underwater. And that's exactly what I was showing you here. How we have this pink line, again, a pivot off our all-time high. And now that we're over the water, are we going to continue to go higher? That's basically what I'm trying to tell you now. If we fall back below 565, that's where things get a little bit more dicey because what we're now going to have to do is actually hold our weekly higher low, which is going to be here at 560. If that holds, fantastic. If it doesn't, that'll be yet another tap at our 161 Fibonacci extension at 561.5. And we're going to make a lower low. I do not want to see that as a bull. All right, so that's very clear now. If we look at the heat map, looking back to our weekend notes, we also note that Fed cuts send already stretched valuations even higher. Yes, that's called a bubble. They're talking about a soft landing here. Well, can't really afford to have very much bad news. If $20 billion a week, every week for the next foreseeable future comes into the market, we're probably going to see the same thing happen here. $6.3 trillion is huge. Please also note, we talked about how we wanted to get to a weekly higher high and close over that high. We did it. We succeeded. In addition to that, we're here into greed. We're sitting at 64, or looking here, we note that our previous high was at 63. So closing back here at 64. Hey, don't give up on the bull market. It looks like we want to go higher. What's really important, like we talked about on the weekend as well, is that on Thursday and Friday, we got really important data. Basically, all of the Fed, including Jerome, speaks on Thursday. And then on Friday, we got core PCE. Those numbers are going to be very, very important. Last thing I'm going to look at here is just going to be looking at a few quick charts. But first, if you guys don't mind, please considering to smash a thumbs up or subscribing to the channel. I would greatly, greatly appreciate that. So the charts that I really want to focus on here are going to be the S&P, QQQ, the dollar, VIX, and the 10-year note. The ones at the top of my list here. Why? Because I think those are the most important ones. Let's have a look here at S&P first. So as of right now, again, beach ball's over, and we want to know if it's going to hold. As long as we keep forming daily higher lows and higher highs, things look cautiously optimistic. The NASDAQ, I'm a lot less sure on here. Why? Well, we have resistance here, and we're unable to get back over it. If this is truly a W, and we're going to put in a win, we got to go higher. The volume tells me we have the bulls in control, but on the weekly chart here, we keep tapping the zone at roughly 486, and we're not able to claim it. Zooming out here to our monthly chart, 486 would be a monthly higher high. We printed a monthly higher high, but we're not currently holding it, which means we're currently in a yellow light, and I don't like that. On the same token, if the dollar has a death cross and it continues to go lower, that should support stocks. So it should drive the S&P and the NASDAQ even higher. Looking here to the VIX, back down to 15, right? 15, 14, and then 13. That's the bottom of the teens. So the market is saying it is calm, it is cool, it is tranquil. But please remember, if the true move is going to be higher after we finish this triple witching, maybe we have to go through a little bit of an opposite move before ultimately going up. All right, last one here, 10-year note. Actually, I got a few more I'll look at quickly. Down, dead cat bounce to a lower high, dead cat bounce to a lower high, dead cat bounce to a lower high. If that's the case, then we're not going to get back above the 50 DMA. And we also have a death cross here. The last one I want to look at here is going to be SMH. And this one here is like really, really tricky. Remember, we talked about what could happen if we start a fade, which it's already started. It's back below the 50 DMA. So if we're going to invalidate this, we have to get back above the 50. That's going to be at 237.75. As of now, we got one candle close back above that. However, we are not back above this 239 area. Why is this area important? Well, because it's a pivot. It's either going to be a shoulder on a head and shoulders, and we go down, down, down. Again, basically repeating what we have here on our daily chart. Again, the pattern right here, yellow box, shoot higher, and then go sideways to down. That was our base case. Well, we better close the week back above here. All right, that's it for today's video. Watch the video on the left, which is more detailed, or come hang out with me at 9:15 a.m. Thanks so much.